The world of investing can feel like a vast and complex sea. Countless opportunities beckon, each with its own set of risks and rewards. This guide aims to illuminate AGGH, offering a comprehensive understanding. We'll delve into what AGGH is, how it operates, and its potential benefits and risks. Let's embark on this journey to demystify AGGH and navigate the bond market. Investing is a journey, not a destination. Each investor sets sail with unique goals, risk appetites, and time horizons. This guide acknowledges that diversity, catering to both novice investors dipping their toes into the market and experienced individuals seeking new opportunities. Whether you're saving for retirement, a down payment on a house, or simply growing your wealth, understanding your investment options is paramount. The world of finance can seem like a labyrinth of complex terms and strategies, but it doesn't have to be daunting. This exploration of AGGH will break down complex concepts into digestible pieces. We'll use clear and concise language, ensuring that investors of all levels can grasp the fundamentals of this investment vehicle. Our aim is to demystify the world of bonds and ETFs, providing you with the tools and knowledge to make informed decisions about your financial well-being. So whether you're a seasoned investor or just starting, let's navigate this journey together. In the vast ocean of investment options, AGGH stands as a beacon for diversification and stability. How does it operate within the market? Managed by iShares, part of BlackRock, it tracks the Bloomberg Barclays Global Aggregate Bond Index. This allows exposure to a diversified bond portfolio with convenience and diversification. Next, we'll explore AGGH's mechanics, benefits, and risks. Before diving into the depths of AGGH, let's first unpack what it means to be an exchange-traded fund, or ETF. ETFs are like baskets of investments, holding a diverse collection of assets such as stocks, bonds, or commodities. These baskets, or funds, are then traded on stock exchanges, much like individual stocks. AGGH, as an ETF, follows this principle by holding a selection of global bonds. Instead of purchasing individual bonds from various countries and issuers, investors can gain exposure to this broad market through AGGH. This simplifies the investment process and provides instant diversification. Think of it as buying a slice of a giant cake representing the global bond market, rather than baking the entire cake yourself. Each slice, or share of AGGH, represents a portion of this diversified portfolio. This structure allows investors to participate in the potential growth and income generated by the underlying bonds within the ETF. In the case of AGGH, the focus is on bonds from around the world, offering exposure to a wide range of economies and interest rate environments. Section 2. The power of global bonds, diversifying your investments. AGGH's strength lies in its global reach, tapping into the potential of bonds issued by governments and corporations worldwide. This global diversification is a key advantage for investors seeking to reduce risk and broaden their investment horizons. By spreading investments across different countries and regions, AGGH reduces the impact of any single economy's performance on the overall portfolio. For example, if one country experiences economic headwinds, bonds from other, stronger economies within the ETF can help cushion the blow. Moreover, global bonds provide exposure to a wider range of interest rate environments. Interest rates fluctuate based on various factors, including inflation, economic growth, and central bank policies. By investing in bonds from different countries, AGGH can potentially benefit from varying interest rate cycles. This global diversification is particularly relevant in today's interconnected world, where economic events in one region can quickly ripple through global markets. AGGH's broad reach helps mitigate these risks and provides a more stable investment experience over the long term. Bloomberg Barclays Global Aggregate Bond Index, a benchmark for success. AGGH tracks this index, a benchmark for the global bond market. It dictates the types and proportions of bonds held, includes investment-grade bonds from developed and emerging markets. AGGH aims to replicate the broader bond market's performance. This passive approach offers transparency and cost-effectiveness, suitable for investors seeking a core bond holding. How AGGH invests. AGGH operates like a sophisticated machine, tracking the Bloomberg Barclays Global Aggregate Bond Index. It holds a basket of bonds mirroring the index. This includes bonds from various countries, sectors, and issuers. Managers adjust the portfolio to stay aligned with the index. Section 2, a tapestry of bonds, understanding the components. AGGH's portfolio is a rich tapestry woven from a diverse selection of bonds. It's crucial to understand the different types of bonds in this intricate investment mosaic. AGGH invests in investment-grade bonds with high credit ratings. The portfolio includes government, corporate, and securitized bonds. This blend achieves global market exposure and risk mitigation. Section 3. The art of diversification, spreading your investments. Diversification reduces risk by spreading investments across different assets, sectors, and geographies. Imagine you have a dozen eggs. Would you place all of them in one basket, risking a devastating loss if the basket falls? Or would you distribute them among multiple baskets, minimizing the impact of a single mishap? AGGH invests in thousands of bonds globally. This broad diversification offers key advantages. It reduces the impact of any single bond's performance. AGGH's global reach provides exposure to various economic environments. A well-diversified portfolio like AGGH's tends to exhibit more stable growth over the long term. Section 4. The Human Touch. AGGH's active management approach. While AGGH aims to track the Bloomberg Barclays Global Aggregate Bond Index, it's not entirely passive. Experienced portfolio managers at iShares actively manage the ETF, making strategic decisions. They ensure AGGH's holdings mirror the index and consider transaction costs and liquidity. Their goal is to minimize expenses while aligning with the index. This active management ensures the ETF operates efficiently for investors. In the world of investing, two primary schools of thought prevail: active management and passive management. AGGH falls into the latter category, tracking a specific market index. Active management involves frequent buying and selling of securities. The goal is to outperform the market benchmark. This approach can be successful but comes with higher fees and risks. Passive management seeks to replicate a market index, minimizing trading activity. The beauty of passive management lies in its simplicity and cost-effectiveness. When it comes to investing, fees matter. Even small differences in expense ratios can impact your returns. AGGH's passive management keeps its expense ratio low, benefiting cost-conscious investors. An expense ratio covers the ETF's operating expenses, including management fees. These fees reduce the money available to generate returns. AGGH's low expense ratio shows its efficient structure and passive management. By minimizing trading, AGGH keeps costs low, allowing investors to keep more returns. Over time, this cost advantage can significantly boost your portfolio's value. No single investment fits all investors. The best approach depends on your financial goals, risk tolerance, and time horizon. AGGH can be a valuable addition, offering global bond market exposure and stable income. It provides stability and balance alongside other assets like stocks or real estate. AGGH's regular dividends offer a steady cash flow, appealing to retirees. However, AGGH has risks. Consult a financial advisor to see if it fits your strategy. Dividends are the sweet rewards of investing, a share of the profits generated by the companies or assets you own. But how are these dividends created, especially in bond investments like AGGH? To understand bond dividends, you need to grasp the nature of bonds. Investing in a bond means lending money to an entity, like a government or corporation. The issuer pays you interest at regular intervals, known as coupon payments. AGGH collects these coupon payments from a diversified bond portfolio. It then distributes them to shareholders monthly. AGGH's monthly dividend payments are a key attraction for investors seeking a reliable stream of income. Unlike some investments that pay quarterly or annually, AGGH's monthly distributions provide a more frequent and predictable cash flow. This steady stream of income is especially appealing for retirees. By incorporating AGGH, investors can align income with monthly expenses. AGGH's monthly dividends provide consistency and stability in an uncertain market. While receiving dividend payments can be gratifying, the true power lies in their potential for compound growth when reinvested. Reinvesting in a diversified asset like AGGH can significantly amplify your returns over the long term. Imagine receiving a dividend payment from AGGH. Instead of spending it, you reinvest it by purchasing additional shares. Those new shares also generate dividends, which you reinvest again, creating a snowball effect. This process is known as compounding. Over time, compounding allows your investments to grow exponentially. You earn returns on both your initial investment and accumulated dividends. Reinvesting dividends in AGGH offers several advantages. It increases your ownership stake without additional funds. This boosts your investment growth over time. The longer you reinvest, the greater the potential for exponential growth. This makes it a powerful strategy for long-term investors. Diversification, a shield against volatility. Diversification stands as a shield against market volatility. AGGH offers a broad reach across the global bond market. It spreads its net wide, encompassing bonds from governments and corporations worldwide. This global diversification acts as a buffer, cushioning the portfolio. Think of it as a safety net woven from countless threads. If one bond underperforms, the impact is mitigated by others. AGGH offers stability amidst uncertainty. The allure of regular income AGGH's monthly distributions. For many investors, the appeal of a steady and predictable income stream is irresistible, a welcome relief in an often unpredictable world. AGGH caters to this desire, offering monthly dividend payments that can provide a sense of financial security and consistency. Unlike some investments that may only distribute income quarterly or annually, AGGH's monthly payouts offer a more frequent and predictable cash flow, aligning with the rhythm of most household budgets. This feature can be particularly attractive for retirees or those approaching retirement who rely on their investment income to cover living expenses. Moreover, AGGH's focus on investment-grade bonds, known for their relative stability and consistent interest payments, enhances the predictability of its income stream. While the actual amount of dividends distributed each month may vary, the underlying stability of bond interest payments provides a level of assurance that can be comforting for income-oriented investors. This regular income stream can serve multiple purposes, from supplementing living expenses to reinvesting for future growth, making AGGH a versatile tool for investors seeking both current and future financial well-being. The value of accessibility investing made simple. In a world often characterized by complexity, simplicity can be a breath of fresh air. AGGH embodies this principle, offering investors a straightforward and accessible way to participate in the global bond market. Gone are the days of needing specialized knowledge or access to exclusive networks to invest in a diversified portfolio of bonds. AGGH opens the door wide, allowing investors of all levels, from seasoned veterans to curious beginners, to easily incorporate this investment into their portfolios. With AGGH, you don't need to be a bond expert or spend countless hours researching individual securities. The ETF's passive management approach takes care of the heavy lifting, providing a pre-packaged and well-diversified portfolio that tracks a broad market index. This accessibility extends to the trading process as well. AGGH trades on major stock exchanges just like individual stocks, making it easy to buy and sell shares through most brokerage accounts. This eliminates the need for specialized platforms or complex trading procedures, further simplifying the investment experience. Section 4. Standing strong. AGGH's potential for stability. Bonds often serve as a steady ship, offering stability amidst market volatility. AGGH, focusing on investment-grade bonds, provides calm amidst financial storms. Stocks can swing wildly, but bonds are less susceptible to sudden shifts. Bond prices are driven by interest rates, moving more predictably than stocks. AGGH's diversified bond portfolio enhances stability. Diversification across countries and sectors reduces impact on the portfolio. This acts as a buffer, smoothing out returns over the long term. Understanding the risks of AGGH. AGGH offers a compelling investment proposition, but it's essential to understand both its potential rewards and inherent risks. Like a captain navigating treacherous waters, investors must be aware of potential shoals. AGGH is not immune to market forces and economic fluctuations. Its diversified portfolio offers protection, but certain risks warrant careful consideration. Section 2. Interest rate risk, the seesaw of bond values. Bond prices and interest rates have an inverse relationship. This is known as interest rate risk. When rates rise, bond values fall, and when rates fall, bond values rise. AGGH is exposed to this risk, but higher rates can mean higher future income. Section 3. Credit risk, the importance of trust and due diligence. When you invest in a bond, you're extending a loan, trusting the issuer's ability to repay. Trust is paramount in bonds, but with it comes credit risk. Credit risk is inherent in bond investing, and AGGH is not immune. Even highly rated issuers can face challenges impacting their obligations. Credit risk can manifest in missed payments or defaults. Such events can negatively impact bond values and AGGH's performance. AGGH managers conduct thorough credit analysis to mitigate risk. Diversification helps spread credit risk across issuers. This acts as a safety net, cushioning potential credit events. Weighing the scales, benefits, and risks of AGGH. AGGH offers a globally diversified portfolio, spreading risk and smoothing returns. Monthly dividends provide steady income, ideal for retirees. Its low expense ratio keeps more money invested, but interest rate fluctuations and credit risks remain. Weigh benefits and risks to make informed decisions. Is AGGH right for you? The decision to invest in AGGH is deeply personal, dependent on your unique circumstances and comfort level with risk. Consider your investment timeline and income needs. AGGH offers stability and income generation, suitable for long-term portfolios. Assess your comfort level with risk. Align AGGH's features with your financial goals for a secure future.